Okay, we're trading the New York session here, April 2nd. This is Thursday. We've got jobless claims out of the way. Again, as I mentioned last night, I wasn't too sure how the market was going to react to something like that. Seemed a bit flat afterwards as far as the reaction, but we did get some breakouts. We're looking at the Japanese yen futures. Japanese yen futures, again, for those of you who are not too familiar with what I'm doing here, I do trade Japanese yen futures at the same time that I trade the dollar yen. Here is the dollar yen chart. So you can see it moves in the exact opposite direction. This is the dollar yen 1 hour time frame. This is Japanese yen futures 1 hour time frame. When you see price moving down here, it's just simply yen weakness. When price moves up, it's yen strength. There's no other currency paired with this chart. It's just yen. So this, again, I can see volume levels. I've got a couple of other indicators that are helping me identify just exactly what's going on here. But on this chart, on the 1 hour chart, I use a technique, for those of you who are not familiar or just starting off, the continuation breakout trade is obviously a candle that breaks out of consolidation, but being able to identify or quantify consolidation is the key to finding the right signal and identifying the right candle that will actually lead to a trending move in the direction of the breakout. So here we can see volume levels picking back up significantly. Whether or not there's follow through, that's a different story. So with the continuation breakout trade, so here I have yen weakness on this 1 hour chart, which confirms. And then I have the dollar yen here, again, indicating yen weakness, dollar strength. And I have confirmation again of a continuation breakout trade. So on both charts, I have confirmation of basically the same setup. But at this point, and for those of you who are just starting off, please take a look at the online course and look at the section for the continuation breakout trade. This breakout candle right here, that's just the signal. That's not the entry. So initially, when I developed this method back in 2001, I tested it out, and when I first figured out how to quantify consolidation, that was my first step. And then I needed to figure out what time frame was appropriate for, what I was trying to achieve. I was trying to day trade, and I wanted to make profits within the same day, usually. So that took a lot of testing, trying to find the right time frame. So the 1 hour chart, I know this works. I've been using it like this for 19 years. So this is the best time frame. I wouldn't use it on anything less. 30-minute charts, and I'll explain quickly why. If I was to use this strategy on a 30-minute chart, sometimes it works, but a lot of times it doesn't. And what ends up happening is, for example, if this was a 30-minute chart, this candle could be the 10 o'clock to 10:30 candle, so it closes at 10:30, and then the 10:30 to 11 o'clock, and I'm not saying this is, I'm just giving you an example. This would be an open live candle, and it comes back down inside a consolidation, and it ends up a head fake move. So when I developed this method, after I figured out how to quantify consolidation, I was still getting stuck in these head fake moves because I was using the wrong time frame. So one day I switched over to a 1 hour chart, and I started testing it out on a 1 hour chart, and that eliminated a lot of the head fake moves just by simply going from the 30-minute to the 1 hour chart. And I quickly realized that for me, and this is just the way that I do it. It doesn't mean that what everybody else is doing is incorrect at all. It's just the way that I trade it, and this system, this strategy that I put together. The 1 hour chart is the best time frame for me to be using this technique for day trading. Now, as I mentioned, so that was one way to eliminate the head fakes, was to just avoid using it on a 30-minute chart. I don't use this technique on any time frame smaller than a 1 hour chart. Now, the next step was I was still getting into the trade when I got the close completed candle outside of the consolidation range. So for those of you, again, who are familiar with this, the consolidation range has to be a very specific range and has to be in place for a very specific amount of time. So all of that is confirmed here. We've got all that data, all those checkpoints line up here. And this is my signal. So again, back to when I initially put together this method, I would get in when the candle would close. And then all of a sudden something like this would happen. It would reverse, it would come back down, it wouldn't go any higher, and I'd get stopped out. So then I would stop and I would think, well, how do I avoid this? How do I fix this problem? How do I know for sure that when I get into this trade, regardless of where, after I get the breakout, is it even going to continue in the direction of the breakout? That's what I'm trying to do here. It's a continuation breakout trade. So I came up with a strategy, and I use a 3-pip entry. And that rule means that based on the signal candle high, in this case, the high is at approximately 3. So I can't get in until 6. Price has to take out the high of this signal candle by 3 pips. And at that point, then I know that the trend is likely to continue in the direction that I'm trading it in and the direction of the breakout. If it does not give me a 3 pip entry, then I avoid this head fake or this potential head fake that we're looking at now, and I don't go long if it drops back down inside a consolidation. This 3 pip entry rule keeps me out of trouble. Now, the other thing I want to be paying attention to here is that I haven't seen the 3 pip entry, so I'm not long this chart yet, this pair. And what I'm looking at is a retracement. And very often with breakouts like this, we see this pattern. It's very, very common. Price will retest the level that it breaks out of and then stops and then reverses and goes back up, and then the trend resumes. If that happens, then I would trade with that 3 pip entry when price comes back up and goes up 3 pips above the signal candle high. So right now, at this point, I'm not sure if I'm going to be able to go long. I'm not short. And I'm going to watch to make sure that this retracement is, for the most part, structured and contained, and see how it reacts when it gets down here to this level that it broke out of. That level right there is 56. I've got it just a pip off there, so let's put it in the right spot. So again, I want to pay attention. Now, this retracement, it doesn't have to hit that breakout level on the number exactly. Sometimes it'll go a little bit lower, but it's the candle bodies, a lot of little details that I'll be paying attention to. And again, if it doesn't bounce and it doesn't go back up and gives me the 3 pip entry, then I'm not going long. This may just go sideways and then collapse and come right back down inside a consolidation after a few hours. Now, the other issue, and something that I want to point out right now, leading into the rest of the day, throughout the rest of the day, I think that things are pretty much set in place now for a couple of hours. The reason that we saw this move like this and this sharp reversal in most of the currencies across the board, including the stock market turned around and started to go back up. Now it's settled back down. But I think for the next few hours, we've created the range that we're probably going to see, and things are going to go sideways now. So I just want to get your expectations, try to help you identify that and why. And again, this is because of the conversation that Trump had just earlier today with trying to get the oil production levels at a more reasonable. Okay, I don't want to get into politics, and I don't want to get into the things that have happened over the past couple of weeks. We already know what happened to the oil market, but he's trying to stabilize it to a certain degree, is what it really comes down to. So the market react to it, and very often when we see issues with the oil markets, it does and can have an impact here on the dollar yen. A while back, a few months ago, when we had those drone strikes in Saudi Arabia and they hit some of those oil fields, the dollar yen reacted to it when the market opened. So we get opportunities like that, and that's what we're seeing here. And it did have an impact in Forex. But I think at this point, we've pretty much seen the ranges set in place across the board, in addition to the stock markets, for the next few hours. So don't expect too much more activity out of this. If you're going to be trading, I would consider only scalping. I don't really like to scalp. I won't be scalping this. I'll still be waiting for my initial overall larger setups, because I've seen some breakouts and I want to get some of these opportunities if those trends develop and the trends in the direction of the breakout continue. So please be very careful here. Just wanted to update you as to why this is happening, and also how to trade these breakouts, and be careful with some of these reversals. The reversals, again, were just recently easily explained. And you got to be paying attention in this market. You really do. You have to be paying attention. Things can turn around sharply, and you need to know why. Because if you close out your trades without knowing why, sometimes the trades will come right back to where you were, and it just sort of tests your ability to hold on to the trade, and it is going to stop out weekends in a situation like this. This is one of those markets where we see a lot of manipulation and a lot of things taking place quickly. So please be very careful. Everything's fine. Everything's on track. We're doing well this morning. I'm just waiting for some more follow through. I just don't know if I'm going to get that 3 pip entry and when. I don't think it's going to happen in the next couple of hours. I think things are going to go sideways for a little while.